Hey, welcome. Thanks for joining us today. I'm Alan Thompson, the hardest working realtor in West Volusia, and I'm joined here with Patrick. Hey, Patrick, why don't you tell us a little bit about yourself and what it is you do?
Hey, Alan. Thank you for having me. My name is Patrick Brill. I work for Altera Home Loans as a mortgage loan originator. I've been in the business since 2009. When I first started in the business, I did not have a finance or mortgage background. This is not something I said I was going to do when I graduated high school. But I got into the business, and when I started back then, we had paper files, still like thousands of pages, and I started by stacking files for processors to start their processing. After a little while, I moved my way into processing myself. I did that for a few years, and eventually I moved into underwriting. I did underwriting for a couple of years, and eventually I made my way to being a team lead. So while I was doing that, I also attained my own real estate license, like you, that I had for a couple of years that I did on the side. And then, almost 3 years ago now, I decided to move into origination. I was kind of, at my ceiling there, and I wanted something a little more. So here at Altera, I have what I've been looking for ever since getting into originations, all the support that I need, and a lot of the technology that, me and you will talk about at a later time.
Cool. So you've been pretty much in every aspect of the mortgage side of things now, haven't you?
Pretty close. I mean, I haven't done title stuff. Part of the underwriting, you look at title docs and everything like that, but that's about the extent. I did a little bit of compliance work when I was working in that field. But yeah, I've had the chance to see a lot of different sides, even as a homeowner, which a lot of people forget that you can't really know what a borrower is going through unless you've actually bought a home yourself. So I've had that experience myself too.
Yes. Fortunately, the last time I had to go through the loan process, it was a whole lot simpler than what it is today. So
Yeah.
I get some of those fears. I imagine with the low interest rates right now that you're seeing a lot of home refinancing.
So with the values still up where they are, which is good, we are seeing a lot of refinances. Obviously, with this hiccup event that we've had, us as a company and as LOs, we've had to adjust our structure to stay competitive because the market is kind of in a roller coaster right now with uncertainty of investors and everything like that, and a little bit more restriction on guidelines. So we're seeing a little bit less purchases because people that maybe qualified a couple of weeks ago don't qualify now. Restrictions have come a little tighter, so we had to do what we had to do to stay competitive and still look out for our customers to make sure that we can help them and bring the rates to a more affordable level. So we're really excited about that.
That is exciting. So with that being in mind, let's say somebody bought their home 4 or 5 years ago, they've built up a lot of equity. They decide that maybe they had an FHA loan right then, they've still got some PMI going, or they've got some credit cards that they need to pay off, and they want to do that refinance. What could somebody expect on their first call to you when they're calling to get refinanced?
So there are a couple things that are good about the scenario you just laid out. So number one is 4 or 5 years ago, prices were well lower than they are now.
Mhm.
So the good thing about someone that has in a loan right now, they have a lot of equity built up because the values have just went up and up and up over the last 4 or 5 years. So they have enough equity to do whatever it is they want, whether it's a cash out and pay off a bunch of debt, or cash out and do whatever they want with the cash. And then also rates right now, and they have been for the last year or so, are lower than they have ever been. So there's a good chance that dropping your rate that you're in right now can save you several $100s a month and interest over the time of your loan. And if you have a decent amount of equity, you could also look at maybe changing the term of your loan. If you don't want to go a full 30 years and start all the way over, you can do a 15-year and be paying about the same and paying a lot less interest and paying your loan off a lot sooner. I find a lot of people that do a cash out, they just want to consolidate their debt. So instead of having like a whole bunch of bills to pay, like car payment, credit card payments, they would rather just wrap that up using their equity, pay one payment of, let's say, $1,500 rather than a whole bunch of credit card payments that you're paying a much higher interest rate on than if you were to refinance your home.
Right. So what are some of the biggest challenges you have with somebody that's not necessarily with the person, but during the refinance uh, procedures for somebody, break it down for somebody who's never been refinanced. They just bought their first home a couple of years ago. They've got that equity and want to build it up, but um, maybe they're a little scared to call you because they've never done this before. What are they expecting from that process?
So the good thing about refinancing is it's a little bit of a easier process than obviously a purchase transaction. There's a lot less moving parts. Um, the only challenges that I really see when it comes to refinancing are one, credit score. Um, credit scores are a little higher than if you were to go and just buy a house. Like before all this event that we're going through, um, credit scores on FHA could be down to 580, 620 for conventional. Obviously, they're a little higher than that now, but even higher so for like a cash out transaction. Um, so number one, you have equity. You have to make sure that you have enough equity because to do a cash out, you can only go up to 80% loan to value. Um, and some people don't have that much equity because maybe they haven't lived in it long enough, or maybe they've already done a refinance and pulled too much equity out. Um, the other thing is they sometimes have a problem with the rate. Like a lot of people don't understand how rates work. Rates are a combination of your loan to value ratio, your loan type, your credit score, and obviously market condition. So with rates, those are the different hits that you get. Cash out transactions are a larger hit to the rate, so they cost a little bit more for a lower rate. Just the same as like if it was an investment property, if someone goes to refinance their investment property or it be a condo or multi-unit, those are also hits to the rate. So they will cost a little more to refinance than your traditional single family owner occupied traditional rate and term transaction. A rate and term transaction is just a refinance to get you a lower rate, not pulling out extra cash. So it's a less risky loan than if you were pulling out equity to do whatever you need.
Okay, that's perfect. I was going to ask about the value of the home. If somebody isn't sure whether they have enough equity in their home, is that something that you could kind of figure out on the first call, or does that need to go through the appraisal process? How's that going to work?
So I don't have people spend money until it's absolutely necessary, and we can't order an appraisal until you're already in the process. So what I usually do is I will either I have different tools at my disposal that I can try and estimate value. A borrower can look online with Zillow or Realtor.com to see themselves. But what I tend to do is I reach out to a realtor partner like yourself and say, hey, Alan, can you pull some, comps on this property and see what you think this is worth? Because that's the same thing an appraiser is going to do. They're going to look at recent sales in that area that are comparable to your house, and they're going to come up with the same value that an agent would if they were trying to sell the home. So that's the starting point to try and see, hey, what's your house worth, which will give us, about how much loan to value we're looking at.
And there's no cost for them to be able to do that portion of it, right?
Of course, no, there's no cost to anything until you get to the part where you have to pay for the appraisal. Obviously, within a refinance, they don't have to do an inspection. Um, and then obviously, I only use realtors that are available and, can just, hey, help me out here with, see what the value is. And that doesn't cost anything at all. So really the only cost up front is just the refinance. Everything else is at closing, which if they have the equity, they can pay for the closing costs out of the loan.
Perfect. So they could actually get to the point that they would pretty much know before they have to pay out anything
Right.
if they're going to actually, if the house is still going to have enough value.
hmm And another misconception is people feel like they're locked in, with signing or whatever. On refinance transactions, not only can the borrower decide to not do the deal even as the day of, just like as a purchase transaction, they still have on owner-occupied transactions a 3-day period after the closing where they can be like, I rethought it, I don't want to go through it, and they have their rescission document that they would sign and send to the title company, and it just cancels.
Wow.
So
I didn't know about that actually. So
Hmm.
that's a great piece that you bring up. Now, if they get to that point and decide that they need to sign that rescission, um, what what costs have they gone through? Because obviously somebody's got to pay for the appraisal and those kinds of things first. So if they got to the point, what would they be out of pocket if they got
The
cool change
appraisal.
their mind? Just the
Yeah,
appraisal.
we can't charge them for the other services that we've done if we don't close the loan. So really, the appraisal is the only thing that they would have had to pay for.
Okay, so really a refinance is pretty low risk deal.
Yeah.
'Cause you're waiting almost till the end before you pay for anything, and
Hmm.
even then you still have a few days to go, oh my gosh, this was a really bad idea.
Hmm.
Fantastic.
But I will say I've never had that happen.
Uh, well, usually people get to that point, they're not they've made their
Yeah.
decision and they're pretty comfortable with it, but it's nice to know that there is that ability, that they're not
Yeah.
locked into something.
Most most of the transactions that on refinances that I've done, they are coming out in a much better position than they were before, whether it be saving money every month, to pay off things that they needed to pay off so they have less monthly bills to pay, or just personal reasons like they needed money for something. I had someone who I did a refinance for that he didn't actually know he was going to need all the money that he did. He paid off everything with the loan, and all he had was his mortgage payment. And he got sick. He got very sick, and he ended up needing that money because he did not have health insurance, and it could have very well saved his life because he had the money to pay for the doctor stuff and the hospitalization and surgeries and stuff that he ended up having to have. And I found about that after the fact because I tend to keep up with my customers, and I was just like, dude, I'm so glad that we did what we did because I mean you could have been in a real situation there,
That's
you
a
know.
pretty amazing story. Are there any other things that you think people should know? What that they get shocked in the middle of the process that they didn't realize that maybe you'd like them to know up front?
It usually comes to the rate part. The way that I do refinances and actually purchase transactions is obviously, like I discussed before about the rates, they are dependent on your loan to value, your debt to income ratio, and everything like that. And you don't really know that until the appraisal comes back. So they usually start, talking about cost and everything after we go to start locking in the rate because if it costs money that it's extra expense on their end or if the house doesn't appraise for what they were expecting it to or we were expecting it to and the LTVs may be higher, it could be and you have the limit, right? So if you're at the limit already, you're kind of expecting a value to come in and it comes in lower, it could mean you can't pay off as much debt, which could be a problem with DTI. So I usually don't get people too excited in the beginning about what's going to happen until we have already locked the rate. We already know what the value is. And like I said, I do that with purchases too because I don't like to bombard people with too much to think about and worry about
Right.
until it's time. So I kind of do it one step at a time. Once we get that appraisal back, we know what the value is. There's a lot less left to do. We got to figure out what rate we're going to lock in, and that'll kind of dictate, hey, this is how much equity we have to work with. This is how much the rate's going to cost for that because this is what your LTV is. And then usually go from there. That's usually the only part that people have a hard time with. It's like, well, why is the rate going to cost me this? And it's like, well, I mean, a couple months ago, rates were as low as they've ever been. They're not as low as they were right now. You know.
Perfect. Well, I really appreciate your time. For those out there that are watching, you obviously do refinance loans and new purchase loans if they're going out to buy a home. So how would we get in contact with you if we're ready to start that process and talk to you about refinancing or getting approved for a loan?
Well, there are several ways. So my phone number is 850-559-6840. My email is pbrill@goaltera.com. And also the app that I shared with you, you're able to share that app with them via text or email as well, and they can contact me right through the app. And I also have my website, Patrick Brill at patrickbrill.goaltera.com. So there are many ways, and obviously Facebook, if they look me up by my name, I have a business page as well. So there's really no other ways to get a hold of me other than maybe mail, but I'm not going to go ahead and give out my address.
We could We could throw it in as a bonus. We'll be hanging around the pool for Christmas there. Is that a pool back there that I see?
It is, and unfortunately, it's been raining today, so it is not. It's not going to be happening
Not a
today.
good day for the pool, but all right, perfect. I'll make sure that your contact information is down below in the comments section. Really appreciate your time today. Thank you so much for some
Of
valuable
course.
information.
No, man, and just so that I wanted to let you and your customers know, and anybody who watches this, that we really are all in this together. So you kind of want people around you that you can trust, and I know that I can trust Alan, and you can trust me. So people like us are not going to steer you wrong, and we're here just to help people get into homes and help their financial situation if we can. So if there's anything that any of us can do, just let us know, and I'll do our best.
Perfect. Thank you so much. And we'll talk again soon, I'm sure.
All right, take care, Alan.
Bye.